Hey, what's up, guys? So, I'm going to go over my two trades on US oil and give you a full trade breakdown on what was my bias, what was my methodology, and the strategy that I'm using to actually get into these trades. So, let's go back to the 15-minute. So, if you follow me on Instagram, I did say that I entered a long trade, this was the initial long trade. I ended up losing that trade. I was able to find another re-entry and I ended up losing that trade as well. But I'm gonna go over that once I go down to the 1 minute to give you a full breakdown. So initially, I'm coming into the day. Um, my watch list originally started with USD JPY and S&P 500, which I'll go over S&P 500 and USD JPY towards the end of the video. But I forgot to add on US oil onto that list. But this was my main thought process. I'm looking at my daily bias where I'm going to get my opinion on where price action could go. So price action's above it. So I'm looking for longs. We end up breaking yesterday's high during the Asian session here. And these previous days highs are previous weekly highs. So those are very significant levels to me. And if price action can break it using an educated guess, using my strategy, once I go down to the 1 minute, that's adding on more probable cause to this trade being profitable. So the next thing that I'm seeing after the breaks of structure, do we fill these bullish gaps in the market, and do we get a retracement back down to the anchor VWAP, where I'm trying to look for a discounted price to trade low to end up selling a high and making a profit, or how traders make a profit. So I'm going to go down to the 1 minute. So we do get 1 minute divergence, which is part of my entry strategy. So as soon as I'm coming down to the 1 minute, as I'm looking at price action moving on the 15-minute, we do get 1 minute, the first 1 minute divergence. We do get two because price action ends up breaking this low, but the RSI is still going higher. Next thing that I'm looking for is this break of structure, right? Let me try and redo that one. I don't like how that one looks. There we go. So on this trade, we do end up getting at least 0.94 R, but the main thing that I'm usually looking for on my trades are 1 R. Now, does that much of a difference really matter to most people? No, especially if you're new to this. But for me, based off of the previous years, if I would have taken this trade off or start taking profit off at this level, what that then does say for me is that all the time that I've spent back testing a strategy, trying to get the statistics, trying to do all this work is null and void if I decide to just start going off tilt and start, doing random stuff. I've never taken profit off before 1R, and I'm not going to start taking profit off now, starting out, just because I go and profit. For the new traders that are watching this, what you guys typically would want to have is a sound trading psychology. What does that mean? It means that through the back testing, through the demo trading, and through the live market trading, you're going to start feeling these amped up emotions of, anxiety, fear, FOMO, fear of missing out. For me, I pretty much got most of that out the way. So right now I'm just trading as a business. These losses, I'm not taking them personally because I understand that losses are a part of the game. But I'm not going to shy away from my losses because I want you guys to see everything that I'm doing, so that once I do start putting out the course material, you guys can see that, or gear your minds toward believing that I'm going to win some, I'm going to lose some, but hopefully I lose less, or I can lose less money over a larger period of time. And when I'm making money, I can piece out more as price is going or the market is going in my direction. So we get stopped out on this trade. I lose that one. We get another entry, or how I'm looking at it for another entry. We get another break of structure. This green line, we zoom in a little bit more. This green line, we get another break above that one, and we pretty much get stopped out on that one too. To me, I ask myself, what could I have done better? Right now, for my specific trading style, I trade not very low, but I trade low risk percentage wise based off of my account. So then it opens room to be able to trade multiple times, because at the end of the day, no trader actually knows where the market's going to go. We use strategies, we use an edge to try and say that we could maybe win more and lose less, or maybe if we lose more, we lose little chunks out of our account rather than these, huge chunks over trading or over leveraging, or risking more than your account, more on your account than what you need to. So take two losses, and this is where price action currently is. Now we're almost at 12 p.m. and like I've said in previous videos, I'm not going to be entering trades from 11:30, between that 11:30 to 12 p.m. time frame. Now I'm done with that. I'm not going to do that. I'm not going to start risking money for that. I would have been perfectly fine entering this trade around like 10:45, 10:30, 10:45 is when I actually entered into the second trade, and piecing off if price would have still kept going up but not hit my take profit. I would have started doing that at 12 p.m. But right now, I'm just going to take these two losses, take it like a man, and not take it personally, and just treat it like a business. It's just a regular day. I took two losses. Now, I'm still up, what, 3 for 2 this week. So I'm still relatively up. I just took some losses this week. It just is what it is. But let's go back to S&P 500, because this is actually on my watch list. I did mark this up. like I said before, like I said before, this is the anchor VWAP, daily anchor VWAP, price actions above it. So next thing I'm looking for are bullish breaks of structure. We break London sessions high right here. We break that. After news, we retrace back down to the anchor VWAP and we start filling bullish gaps in the market. So now going down to the 1 minute, and basically the same thing happens on S&P 500. We do get 1 minute bullish divergence. We get a break of structure, and that's where I would have entered, and we get stopped out. I didn't enter into this, but this is me talking as if I would have actively entered this trade. Of course, I started trading US oil first, and typically I'm not jumping back and forth from different pairs on my watch list. If I'm trading on one pair, I'm sticking on that one pair the entire time, either win or lose. And what I'll typically do is for the other trades, I'll just go back and mark it up. They're all a part of my watch list. It's just that sometimes some trades appear before others and they require my undivided attention in order to properly manage those trades. Now, this is another entry here. We get a lower divergence, a lower 1 minute divergence. We get another bullish breaker structure. This is where I would have entered at. Looking for 1R on this trade. And we go slightly into profit, and now we're more in drawdown right now. So at this point, I'd just be looking at these trades. I'd just be marking them up on TradingView, making my notes on them, and then at the end of the day, at 4 p.m., I'll add them all to my statistics. And I know a lot of you are also going to be asking me, like, well, Malik, where's the statistics? I have about 100 or so back tested. Well, I think it's around, yeah, it's around 100-ish in trend statistics in order for me to trade that. But the issue with TradingView is that they don't allow you to go back later in time where you actually made so many markups. So some of my markups are pretty much lost. So, you know, life of the trader. So what I'm doing right now for you guys is still adding these markups, getting these statistics, these percentages. So when I actually push out, things like what's my win rate, all of these other different things, I want to have enough data to give you guys so it's good information. I'm not just trying to make a buck off of you for this. I really want you guys to learn this stuff. And if you take the time to learn this knowledge, it'll make you profitable over time. But for me, I just want to make sure that the content is quality and that there's good information in it. That's just the main thing. So this markup is still running. I'll add it at the end of the day. Let's go over USDJPY. And for USDJPY, I was looking to take this long. Daily anchor VWAP, looking for bullish trades. I was looking for price to break this Asian range high or the intraday high. It kind of does, but then it pretty much ends up rejecting from that. At 8:30 news, it pretty much pushes price all the way down. We end up breaking the Asian range low. So price is now telling me that it wants to be bullish rather than my bias of thinking that it could be long. If all of these added probabilities would have stacked in my favor to lead up to a probable entry. But we don't really get anything. Price ends up going counter trend going towards my daily anchor VWAP that gives you my bias. And at this point, like I said, I don't have enough back tested data to tell me that I can be profitable over time with counter trend entry. So I'm not going to trade them. If anything, if this shows an entry, I'll mark it up, I'll throw it into the statistics, and I'll review that data at the end of the week or over the weekend. But that's pretty much it. Like I said, 3 for 2 this week, still up, but just took 2 losses today. Part of the game, part of the business. And next week, just go in with the same type of focus and make it a strong week. All right, guys, thank you for your time.